Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from medical device company LifeHealthcare Group is Managing Director and CEO Matt Muscio. Matt, welcome back.
Thanks, Carolyn.
First up to your financials, you've just released your first half 17 results. What were the highlights?
We were pleased with the progress that we made both on the growth of the company but also on some of our key innovation initiatives. On the financial side, we had above market growth again with revenue of $61.7 million, which was growth of 13.4% on the prior comparable period. We had underlying EBITDA of $9.1 million, which was growth of 7.3%, despite some margin decline from foreign exchange. Looking forward, however, with a 12-month hedging policy, we look forward to a small tailwind as we go into next financial year. We also made some progress on some of our key balance sheet metrics. Some of the commitments that we put forward at the end of the last financial year. We had a 500 basis point improvement in our net working capital to revenue ratio. We also had cash conversion of 80.2%. When you look at our historical cash conversion in the first half, it's typically weaker, and so that was a good result also.
Very good. So what drove the results?
There were a number of key initiatives that drove the result for us, Carolyn. When you looked at the underlying implant growth, we continued to grow above the market at 12.8%. This was underpinned by a growth of 7% in the new active surgeons that we report on. We also then had penetration in complex orthopedics, and we had share conversions through our minimally invasive and 3D printed spine portfolios. We continued good momentum in robotics. We had 2 additional robotic units that were rolled out in the first half of the financial year, giving us a footprint of 6 units in the marketplace now. And this is a strong complementary portfolio for our minimally invasive spine, particularly with the XT system that we'd rolled out from K2M in the previous year. We had good growth in our interventional cardiology and respiratory technologies following the acquisition of Medical Vision Australia in 2015. And finally, we were pleased to expand on our intraoperative CT footprint. We're going to put a Ceratom cranial CT scanner into the first mobile stroke unit in Australia, and we've also confirmed the placement of a BodyTime intraoperative CT at the Epworth, Richmond in the 4th quarter.
So Matt, robotics and diagnostic imaging are emerging areas of innovation in this space. So what's LifeHealthcare's involvement?
Look, LifeHealthcare's always been focused on the innovative areas of technology, and for us, as we look at areas such as robotics and diagnostic imaging, not only do we see an opportunity for the company to grow capital and implant sales, but this is really an opportunity to also see superior patient outcomes and improved health economic outcomes for the system. For us on robotics, with our partnership with Mazor, we've been able to deliver improved patient outcomes both through less invasive surgery, reduced revision rates, giving surgeons increased accuracy of surgery. And that plays out in terms of giving better health economic outcomes with reduced wastage of implants that might need to be misplaced or resized during surgery. There's also reduced revision rates from misplaced screws, and through that minimally invasive surgery we get shorter length of stay. So following on from placing 2 units into the market in the second half of last year, we've put a unit into Wollongong Private and another one into Epworth, Richmond. And with that footprint we've now got, it gives LifeHealthcare the leverage with our spine expertise to continue to grow above the market in that space. Turning to diagnostic imaging, as you see imaging become smaller, more mobile, and you've got higher quality of images, it really does open up some exciting opportunities. As your viewers would be aware, stroke is one of the leading causes of death and disability in the community. When you look at ischemic stroke, which is a clot or a blockage within a cranial vessel, this represents about 87% of strokes. Compared to hemorrhagic stroke, which is a rupture, ischemic stroke patients can be very effectively treated with a clot-busting medication if they have an accurate diagnosis and a timely application of the treatment. The Ceratom cranial CT scanner has been successfully installed in ambulances in both Europe and North America. This means that the ambulance team can diagnose a patient on site. They can wirelessly transfer the images through to neuroradiology departments and get that accurate diagnosis and start treatment immediately. So we're really excited to be putting the first Ceratom CT in the Southern Hemisphere into an ambulance. We'll be doing that in partnership with Ambulance Victoria, the Royal Melbourne Hospital and the Victorian Government. And this is going to make a real impact to patients' lives in Victoria and to the cost of rehabilitating patients who have suffered ischemic stroke.
Matt, so can you give us an update on LifeHealthcare's partnership with K2M and your recently announced agreement?
We were very pleased to announce earlier this month of a new 5-year agreement with K2M. We've been in partnership with K2M since 2010, and through that relationship we've yielded significant growth and actually been able to obtain a number 2 market share position in spine in Australia. K2M's a globally recognised innovator in spine. They've led the way in deformity and now in minimally invasive and 3D spine solutions. With our partnership, we've delivered a number of key initiatives, including the Everest XT minimally invasive spine platform, as well as other key educational platforms such as Deformity Down Under. And some of these are specifically fit to Australian and New Zealand spine clinicians' requirements. We're excited that this new announcement, this new agreement puts us in place to make ongoing investments, both K2M and LifeHealthcare, for us to strive towards our shared goal of the number 1 market share position in Australia and New Zealand.
And finally, Matt, what's your outlook for the second half of FY17?
LifeHealthcare continues to be well positioned for sustained above market growth, both through expansion of our active surgeons, new product introductions. We also see the opportunity for ongoing improvements in our key balance sheet metrics. For the second half, we see a more modest growth on what was a very strong comparable period in the second half of last year, but with stable gross margins and with maintenance of our ongoing operating expenses, we see improved EBITDA ratios in the second half. So with our trading up to the end of March and with that being all on track, we've reaffirmed our guidance of mid to high single-digit revenue growth and low to mid single-digit EBITDA growth.
Matt Marcio, thanks for the update.
Thanks, Carolyn.